Hello there. My name is James, and welcome to CCRP. It is a place where we speak about credit cards and reward points. I would like to start off this new channel with an introduction to credit cards. Now obviously a lot of you know what a credit card is, but I would like to focus on A. Students, and B. Individuals with no credit history. Those who already have a credit card and finding it difficult to manage it, or you are not able to maximize its full potential, then you guys are also at the right place. I will do my best to keep it as simple as possible. Don't forget to like, share and subscribe. Get ready and here we go. What is a credit card? A credit card is a pre-approved credit facility from a banking or non-banking institution. Traditionally, it was only issued by registered banks, but nowadays we see non-banking players like retail chains in the picture. It is mainly to retain customers and promote brand loyalty. The credit facility is set for a fixed amount and it is commonly known as credit limit. And depending on payment history, the institution may decide to increase or even decrease the limit in the future. Rare cases even shutting down the card permanently. The user cannot use more than the allotted credit limit, as it attracts charges from the institution as well as a bad mark on the user's credit file, which jeopardizes future applications for loans and mortgages. Now, every time the card is used, a due date is set by the institution. Doing so regularly improves the odds of a successful loan or mortgage application in the future. The credit limit is set by the institution. They have the final say. At best, what you can do is to call the institution and inquire whether the limit could be increased or not. That is, if in case you are dissatisfied with the limit set by the institution. The institutions usually review limits every 6 months. So if in case there has been a limit increase, it is best to wait for at least 6 months before requesting again. This is commonly done after a credit file check. This file highlights the user's historic handling of other credit facilities. They will get to see the user's other credits with other institutions. Judging how responsible the user has been with the other facilities, they will come to a conclusion whether or not provide more borrowings to the user. This decision is usually taken by a dedicated lending or risk department within the institution. I will talk about some of the factors they will look at in a future video. This report will show all loans, credit cards, overdrafts, and in some countries feature bills. That is, both closed and active ones. The next topic to talk about is card payment network. Before I tell you what it is, let me tell you the 3 biggest players in this space. Number 1 is Visa. Coming behind Visa at number 2 is MasterCard. And at 3rd spot is American Express. The identification of payment network is easy, as the logo of the network will be present on the card. All these networks are American corporations. MasterCard and Visa cards look something like this, and American Express cards look like this. All of these networks are similar in many ways, and some of the very obvious ways to distinguish them is Visa card number starts with number 4, MasterCard number starts with number 5, and American Express card number starts with number 3. Visa and MasterCard numbers are 16 digits long, whereas an American Express card numbers are 15 digits long. Now, I'm going to keep American Express cards aside and talk about Visa and MasterCards in general due to their similarities. Starting with the appearance of a credit card. The front end of a typical credit card looks like this, and the back like this. The card issuer logo will be embossed on the card. There is an EMV chip on the card for additional security, mostly to prevent skimming. A 16-digit card number that is unique to each cards. The expiry date in YY format that highlights when the card will expire. This is usually the place where the card holder's name will be printed, a magnetic strip or tape that stores details of the card. A signature strip isn't relevant today, but there was a time when the card holder had to sign this strip, and the merchant had to verify the signature on the receipt matches the one on the card, in order to reduce unauthorized use. Card Verification Value, or CVV for Visa, or Card Security Code, or CSC for MasterCard, is an additional layer of security for online or over-the-phone transactions. It makes sure that the card holder is in possession of a physical card, and it reduces scams. Now moving on from the appearance of a card, let's talk about the most important thing: how to use a credit card. When we talk about using a credit card, first we need to talk about the 2 dates involved in it. Number 1 is statement generation date. Most of the credit card's cycle doesn't start from the first of a month. It usually starts around the middle of the month by default. This date is called statement generation date. It marks the start of a new credit card cycle, and also the end of the previous credit card cycle. The second date is called a payment due date. This usually falls roughly around 21 days after a statement generation date. When a balance is calculated on the statement generation date, it highlights how much the cardholder owes to the financial institution. And on the same date, the cardholder is notified of the last date the holder can wait to make that payment. If the cardholder fails to make the payment on or before that last date, the institution will charge interest and late payment charges. This last date is called payment due date. If you are still confused, then allow me to explain it again with an example. This is a bank. It's the 1st of January 2021. Let's assume that you got a bank account with this bank for a few years. It has got a bank balance of $1,000. You happen to get a new credit card from the bank for being a good banking customer. The starting credit limit is $500. Balance on the card, as of now, is nil. The statement generation date, set by the bank, is on the 15th of every month, so the first statement date falls on the 15th January 2021. The payment due date, set by the bank, falls around the 5th of every month, so the first payment due date falls on the 5th February 2021. So in this case, any transactions that happen from January 1st to January 14th will be billed on January 15th, and those transactions got to be cleared before February 5th in order to avoid any interest and charges. Let's look into that in detail. So the date is January 1st. You got the card, and the balance is nil. 2 days later, on January 3rd, you decide to spend $10 at the grocery store. This means the card is no longer at zero balance. It has got a balance of $10. And the available credit limit on the card has reduced from $500 to $490. A day later, on January 4th, there is a transaction of $40 at the gas station. This makes the balance increase to $50 from $10, and the available credit limit reduced to $450 from $490. Lastly, on January 7th, a transaction towards rent amount is for $150. Total balance is $200, and available credit limit is $300. Let's fast forward to 15th now. So, as I said, the date is January 15th. There is still $1,000 in your bank account. And when it comes to your credit card. The balance used on the card is $200. Then the available funds on the card is $300. As we have kept the credit limit of the card as $500. So since the statement generation date of the card is set on the 15th of the month, and it's January 15th today, the first statement of the credit card will be printed. The printed statement can be sent to the customer through the post or via the email in a PDF format, depending on the preference set by the customer with the institution. This statement will list all dates, merchant name, amount of all transactions. So in this case, the statement will show all transactions I have shown previously. And then it will say, balance is $200. Available to spend is $300. The credit limit is $500. In most statements, details stated next will be highlighted. In this case, it will say, due amount is $200. Then, it would say, minimum amount due is $20. And the due date for this amount to be paid is on the 5th February 2021. Minimum payment is usually calculated as the 1% of the total balance used. But the formula used to calculate minimum payment varies with different institution. In this case, if the cardholder pay off the owed $200 before 5th of February, then the user will avoid both late payment charges and interest. Now if the cardholder pays between $20 and $199 instead of the full $200, then the user will not incur any late payment charges, as the user has paid over the minimum payment required on the statement of $20. However, the user will have to bear an interest for the outstanding balance or the deficit. The interest rate of each card varies, depending on the institution. Now if the user paid less than the required minimum of $20, or didn't make a payment at all towards the card, then the user will have to bear both late payment charges and interest, on top of the total balance of $200. So then let's fast forward to the 25th of January 2021. You have taken a decision that on this day, you will make a payment from your bank account towards the credit card and clear the $200 due. So your bank account, which had a $1,000 balance, it has been reduced to $800 now. So coming to the credit card, the balance used on the card is back to zero. The available funds on the card is back to $500. So the complete $500 limit is now back available to spend. Since the balance was cleared before the 5th of February 2021, no interest or late payment charges will be applied by the institution. So in conclusion, let us look at the timeline of the credit card activity. On January 1st, 2021, you got the new credit card from the institution. You made some purchases using the card, and on the 15th January 2021, the first statement of the card was printed. The balance calculated on the 15th January 2021 was due on the 5th February 2021. That is the January statement. And this statement shows all transactions from January 1st to January 15th. Simultaneously, the February statement will be printed on the February 15th, which will highlight all transactions between 15th January and 15th February. And this statement will be due on March 5th. So in this case, the credit card cycle is from the 15th of one month to the 15th of the next month. It is not calculated on a calendar month basis. If you feel that the due date doesn't fall at a favorable time of the month, then you can speak to the institution to get the cycle dates changed. If you are still wondering, even after watching this video so far, why on earth would you use a credit card? And how would it benefit you? If you are saying, I will just stick with a debit card, or I will just use cash like the good old days, because I am an old soul, then tune into my next video to find out the benefits of using a credit card. Thanks for watching. See you on the next video.